Hey everyone, Mortgage Nerd here, Phil Stevenson. I want to talk about what I call the most misunderstood mortgage that exists. What is a reverse mortgage? A reverse mortgage is a mortgage like any other, but it's for people who are 62 and over, and there are some reverse mortgages now that are for people 60 and over. What they do is you are able to use your home as part of a retirement plan. How? You hear all these misconceptions about it. All you're doing is you're taking out a mortgage, you're borrowing money on your property, and instead of taking the money out of your pocket and sending it to the lender, you're making that monthly payment and sending it to the bank or the lender, the money you're not paying adds on to your loan amount. So the interest you're not sending into the bank, when you make a mortgage payment, you send it into the bank, you never get that payment back. You never get that money back. Well, someone that's 62 and over, they're on a limited income. Cash flow is what's most important. Liquidity is what's most important. So they don't have to send that payment in. So they keep their money. And the interest they're not paying adds on. It's called deferred interest. You hear that a lot. You hear that sometimes credit unions or banks, they'll say, don't make your payment this month. It's our Christmas gift to you. It's not a freebie or anything like that. It's just deferred interest. It's going to be paid later at the end. Now, there's no end term in the reverse mortgage. The actual date on the closing documents is the younger borrower's 150th birthday. So yeah, we're going to kick you out of your house if you have a reverse mortgage and you live until you're 150 years old. Otherwise, the interest adds on. It adds on to your loan amount. So if you owe $100,000 and your interest is 5%, that's $5,000 a year. So at the end of 1 year, that $100,000 will be $105,000. At the end of 2 years, it'll be $110,000. That is not the exact math, but it's for you to understand a simple example to get it to sink in a little bit. So when do you pay that loan off? When you sell the house, or when you pass away and you leave it to your heirs to sell the house. So it's deferred interest. You're not making the payment now, you're making the payment later. So the reverse mortgage is going to be paid at the end. When you sell the house, when you refinance, when you pass away and leave it to your heirs, and that's it. There'll be other videos on the reverse mortgage, but that'll give you a nutshell understanding of how it works. Thank you.